Will the Federal Reserve hint at rate cuts at this week's meeting, and are markets pricing expectations accurately? Joining me today is Will Rhind, CEO of GraniteShares. Will, welcome back to the show.
Thank you. Good to be back.
Yes, happy to have your perspectives on possibly a big news event this week, the Fed meeting here taking place. The market, as you know, pricing at an 80% chance of a cut. Are we getting ahead of ourselves here?
Potentially, I think as far as this meeting's concerned, I think the expectation is there probably won't be anything happening this week, but if there is a cut, it's probably going to happen in the July meeting.
Now, what happens if this cut doesn't happen? Because we've seen how gold's been reacting. We saw the momentum, especially last week. What happens to gold then?
Well, I think gold still does well in that environment because the expectation in terms of the market right now is so overwhelming against or for a rate cut that we have right now, from a probability perspective, more chance of rates going to zero than we do one hike in the market.
Right. Well,
so at the moment, you've got real interest rates coming down, or expectations of real interest rates coming down, and that's obviously positive to gold. So anything that happens that further cements that, i.e. a nominal rate cut, I think only helps gold.
Do you feel that's really what's driving, the rally that we've been seeing, the momentum behind gold, or are there other factors you're looking at right now?
I think there's some other factors. I mean, clearly the geopolitical situation in the Middle East with regards to the oil tankers and the situation there that certainly caused oil to spike has benefited gold a little bit. But in my mind, the overwhelming factor here is the dollar and the interest rates, and particularly the real interest rates. And that's one of the best correlations or relationships that we have in terms of real interest rates and gold. And so when you see real interest rates coming down, the opportunity cost, obviously, of holding an interest rate, a zero interest rate yielding asset like gold diminishes, and that's positive for gold returns.
We also see kind of the Billionaires Club jumping on the gold bandwagon right now. I spoke about this with Frank Holmes earlier today. Paul Tudor Jones, the latest to jump in here. What could this tell us? Do they know something we don't know here?
I'm not sure it's necessarily they know something we don't know, but it's an indication that institutional or smart money, whatever you want to call it, is moving into the space. Some of those investors, I think, have gold already and have longer term allocations, Bridgewater, et cetera, as part of the philosophy is to own gold. But certainly, this happened last time that gold rallied, obviously hit an all-time high, as you had many sort of so-called celebrity names that were investing in gold, and I think this time around could be very similar.
Right. So maybe we're not going to expect a boring summer. Usually the summer months start becoming really heavy and hard for the precious metal space, but perhaps not.
No, I think that is logical. I mean, in terms of the rationale for investing in gold, you've got an environment where investors are becoming more defensive, and so what better place to put money than an asset class like gold. And so people are positioning more defensively. You're seeing interest rates coming down, which is typically good for gold. And obviously, if that manifests itself in a softer or a weaker dollar as well, that's positive. And then layer in sprinkle in some geopolitical risk on top, and the environment is good. But I think the overwhelming thing from my perspective is investors just becoming a little more cautious, a little bit more defensive, and looking to add some uncorrelated exposure into the portfolio. And gold is probably the best known way to do that.
Well, finally, your ETF exceeded 500 million in assets last month alone. So, what has contributed to the investor interest here?
Yeah, so that's the GraniteShares Gold Trust, ticker code BAR, BAR. And, I think it's, again, a continuation of the story that I've been telling for now, a couple of years, which is low-cost access to gold with no K1. And I think from an investor perspective, people are looking to allocate portfolios to gold. Part of that is they want exposure to an uncorrelated or low correlated asset class right now, becoming a bit more defensive. But the other part is just simply moving money from more expensive gold ETFs and allocating that money into a lower cost product like BAR. So that's been a big trend as well that we continue to see, and I think will only increase as gold continues to be popular in the eyes of investors.
Well, do you find it interesting that this time around we're actually seeing good momentum behind gold and Bitcoin at the same time? Usually, we've seen how the cryptocurrencies perhaps took some fuel and fire away from the precious metals, but not this time around.
Yeah, not this time around. It's difficult to say, obviously, because the data set with Bitcoin and cryptocurrencies is so limited in comparison to gold. But I think it's another, in my mind, reaction to investors looking for something that's not correlated. And so looking for an alternative asset class. There will be, for a lot of people, that will be gold, but increasingly people are also investing in Bitcoin or putting money into cryptocurrencies more broadly. So I think from that perspective, the Facebook announcement about
Libra.
a new coin, Libra, that's also helped kind of more institutional support, if you will, for the cryptocurrency market. And obviously, with a network of subscribers that they have, that could be a big force in the market.
Definitely one to watch. Will Rhind, thank you so much for joining us today.
Thank you. Great to be here.